Well, the banks took the local bourse up today, but worries over Chinese manufacturing trimmed the gains. I spoke to market watcher Marcus Padley earlier. Well, Marcus Padley, a positive finish for the market today, but that latest Chinese manufacturing measure was a bit of a bucket of cold water for both currency and equity markets, wasn't it?
Yeah, it certainly was. Our market was up 28 before that came out and ended up below there, and resources also tipped over. It was just the HSBC number, though. It wasn't the official Chinese PMI number, but it is a lead indicator, and it does feed into that recent downgrade by the Chinese themselves of forecasts for GDP, and it fed into the negative sentiment that was around yesterday from the BHP iron ore presentation, and resources seem to be lagging the rest of the markets. Financials doing a lot better at the moment.
Now, meanwhile, I see we have a Goldman Sachs US strategist telling us it's a once-in-a-generation moment, quote-unquote, to sell bonds, US bonds, and buy equities. Would his rationale apply here to Australian investors?
Well, it probably would, Tiki, and this is one of the classic relationships that brokers look at or strategists look at, which is the relationship between bond yields and equity yields. And equities is the obvious place. PEs are 33% below the 15-year average. Yields are high. It could be good for equities. That's the point Goldman's trying to make, which is completely the opposite point of Ken Henry. The joke in Broking House, of course, was when a politician tells you that nobody's got enough, everyone's got too much equities, that's a sign to buy.
OK, well, to a couple of stocks. And David Jones, of course, was punished yesterday after its profit announcement and its those dismal projections. What's happened to the stock today?
It was down 11% yesterday. It was down quite hard, actually, first thing, but it's recovered a little bit. There are 6 broker recommendations out today. 3 of them have got a sell, 2 of them got an underperform, and the most optimistic has got a neutral. So it doesn't look like people think David Jones is a bargain yet.
And a change of auditors at Leighton Holdings. What's going on there?
Well, they got fined at the weekend $300,000 for that profit warning back in April 2011, which ASIC had problems with, and they've just accepted whatever ASIC's been saying, and maybe it's a function of that they're now changing their auditor. It may be nothing Machiavellian at all. It's not really explained. The share price was down on the back of it, but again recovered. I don't think it's a sort of long-term issue for Leighton's.
But not disclosed anyway, the information. All right, Marcus Padley, thank you very much for joining us today.
My pleasure, Tiki.